Hello, 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 everyone. Happy non-farm payroll Friday. How is everyone doing today? Good morning, Anissa. Good morning, Patrick. Hello, Waka Waka. Very strong number from non-farm payroll. That's Fed money market pricing 75 for the 75 basis point has 93 implied volatility, and actually the Fed watch tool pretty much has the thing fully baked in, and it's even jumped. Remember, we're not going to get a full 100 basis point hike. Oh, excuse me. But it was a crazy jobs number, well over. Good news equals bad news. We got Bostic speaking also right now. Good morning. Happy Friday, Josh. Good morning. Good news is bad news. Bad news is bad. News is you just got to trade the price action. Hello, Christoph. All right. So we'll get going in a second. I'll see if Bob can join. I don't know. I haven't heard back from him yet this morning. By the way, if you're new here, please do consider subscribing, ring the bell, and hitting that like button. Longer term viewers, if you have not yet subscribed, please do consider on our push to 5,000. So that's where we stand. That's out of the way. All right. All right. So again, non-farm payroll expect forecast 268, 372. So massive meat. Unemployment rate staying the same. Average hourly earnings staying the same. Year over year, a slight uptick in average hourly earnings. Participation rate dropping from previous a little. Average weekly hours down slightly. Manufacturing payrolls up, stronger number, and non-farm payrolls are up strong. And by the way, we just have wholesale inventories coming out at 9. So let's see. Let me get back to here because we're going to have to bring on Bob in a second. So stock market success or failure is wholly in the hands of the 12 bureaucrats who sit on the FOMC. And it seems to be trading off like if like 25 basis points is going to make or break everything. I mean, if that's the world we are. Addicted to free, cheap money, right, Bob? I'll bring you on. Here, the
We
Bob
are
button.
addicted to
Addicted
free,
to
cheap
cheap
money.
money.
Yes, that is a definite yes.
Well, options 22 looks like he's in Greece. Tuning in from Greece. Thank you. The market looks strong. PTP, but yes, we're pushing 5K subscribers. Hoping to get there soon. Josh says, morning, Bob. Now let's hear what you have to say about the payrolls, Bob.
I think you have to kind of put this in under the heading of a strong report. We talked about it yesterday. Bad news would be good news, and good news would be bad news. Um, Obviously, stocks got hit. I don't know if they're staying hit. I've actually got that screen off. Hang on, let me turn that on. Yeah, they're staying hit.
Yeah, but they bounced
They're
back.
staying down.
They bounced back a bit.
Yeah, they bounced back off the lows, but yields went up as well pretty significantly. The 10-year was below 3 when I marked it before the non-farm payrolls report. And the last I looked at that, I'll look at that again right now. It was above 3. I think it was like 303 or something like that. It's 307 now, 308. Twos, tens inverted by 5 basis points. They were inverted by 3 prior to the number. So the number's actually playing into Fed needs to be more aggressive, but the Fed activity is going to work, even though yields ran up in all parts of the yield curve. They ran up more on the short end than they did on the long end. The one thing I would look at is there's a weird divergence going on that doesn't usually go on consistently in this set of numbers. And that's the household survey has been soft while the headline has been strong. That doesn't usually persist. You see those once in a while, but it doesn't usually persist. And it's been 3 numbers in a row that's happened. Also, you look at the JOLTS jobs report, the jobs openings are shrinking. And that's kind of an indication. That's the first thing that companies do is they pull their jobs openings down before they fire people and lay off people. And we've seen the list of layoffs growing anyway. The numbers haven't been dramatic, but the list of companies laying people off has been growing. So one of the things people have to remember is the jobs report does lag, and it lags quite a bit. So yes, Patrick, that's actually right. And it generally, so the Poor Household Survey suggests lower small business and lower self-employment and lower service employment as well, because service employment doesn't fall into the non-farm payrolls. It falls into the household part. That's why they do the household survey. It's because a lot of services are small businesses and self-employed, right? An accountant's office, for example, things like that. So they need that household survey to be strong as well to say the jobs overall are strong. But it is feeding into that narrative that the Fed is going to can continue to be more aggressive, and that it's going to work. Now, also the wage part, the wage component of the non-farm payroll showed the potential for there to be less wage inflation. But again, this doesn't necessarily pick up services inflation. Okay, so you really need wages to not necessarily turn negative, but be flat consistently. The average hourly earnings up 0.3 in June versus an expectation of 0.3, but 0.4 last month was a revised higher. Year over year, 5.1, revised higher to 5.3. Forecast was 5. So it's not dramatically rising. Now, some people will look at that as, well, that means people can afford the inflation. We've seen some of the inflation figures get a little softer. Yeah, that's sort of true. But they're not rising at the rate they should, given where inflation is likely to stay. And also keep in mind, those wages are not likely to be pulled back as prices go lower. So that's what I mean about the services inflation. You need wages to actually fall for services inflation to start to drop.
Christoph asks, when are we getting significant wage raises with this strong labor market?
Well, again, the wages are starting to show some improvement, but they're not keeping up, Christoph, with inflation. Now, what I said about the household survey and the JOLTS, the combination of the JOLTS with that, if the JOLTS jobs openings are falling, you're not going to get significant wage raises. You're not going to get them, because that means that companies don't need new employees. So they're not bumping up the money of the old employees to keep them there. In other words, like, the first thing you want to do is keep your current employees. And then if you need new employees, you hire them. But you got to keep your current employees happy, because if you need one person and one person quits, now you need two people. If you were already struggling to get that one person, two's even harder, obviously. So from this perspective, it's likely you're not going to get them if the JOLTS jobs opening numbers keep falling like they did last week. Or it wasn't last week, right? It was just yesterday or day before.
Yeah.
When was that number, Mikey? Do you remember?
The JOLTS was like,
I think it was Wednesday.
yeah. Oh boy, come on. Just
Come on.
here it is. Hold on. It was the JOLTS was on, and they're
Here it
sorting
is. It was
numbers.
on
It was
the
back on July 6th, so it was on Wednesday.
yeah, it was on the 6th. It was on Wednesday. JOLTS jobs openings, 11.25 million. The forecast was for 11, but the last was 11.68. So that's a pretty big drop. That's a pretty big drop.
Sterling
We don't look much at quits. Quits doesn't matter that much.
Sterling
But
has
anyway,
a question.
that's yeah.
See
What is
Sterling's
that, Bob?
question.
Some are theorizing we can go through a recession without increased unemployment. But wouldn't that only be possible if you had highly qualified people working in menial jobs? I don't know. Let me think about that, Sterling. I don't think we can go through a recession without significant job losses, and that's because the National Bureau of Economic Research, the NBER, would not classify it a recession, in my opinion, unless unemployment rose. Now, also, unemployment stayed the same, but labor force participation fell. I think I'm right on that. Well, I think I saw that, but let me just look before I repeat that statement. Participation rate, yes, 62.2 versus a previous of 62.3. So the unemployment rate is probably a little bit lower. Participation rate fell. Do you guys know what that means? What the labor participation rate is? Um, oh God, Jim Cramer, recession is canceled. He's become such a shill. He's just an idiot. He was not an idiot his whole career, by the way. Although I
He's
think his hedge fund
well, he's been an idiot for years.
failed. Okay, we'll give him years. I don't think it's been his whole career, but we'll give him
No,
years.
we got to give him years. I
Let
was
me know
still
if you guys know what. I'm sorry, Mike. Go ahead.
I was still fading his calls when I was pair trading back in 2007. So
Yeah, that's a long time.
I mean,
Um, so let me know if you guys know what the labor force participation rate implies or what it even is. But it's been higher. It's usually, I shouldn't say usually. Historically, the median for that's been about 64, and we haven't been able to get back to that for quite some time, since really the pandemic. It was 64 something previous to the pandemic. But if the labor force participation rate doesn't increase, Mohammed El Arian said this morning, I thought it was a great comment. He said the labor force participation rate is to jobs what productivity is to an economy. So if you don't get people actually getting off the couch and saying, okay, I've been out of the labor force for quite some time. There's a lot of jobs out there. They're jobs I want to do. They're good jobs. So I'm going to get up off the couch and get back into the labor force. That's never a really good sign for the economy. So
do you think we will see a big pullback on the next Fed report? Next
big
Fed,
pullback. I'm not sure what you mean by that, Chris. Do you mean our
you know,
markets are going to pull back, or what Fed report? Are we talking about the Fed meeting? I'm not sure what the question means. Do you know what that question means, Mike?
no, I have to get clarification. Yes, Kramer
Chris,
will
can
be
you
right eventually.
reword that, please? Oh, I don't know that he will.
Even a broken clock is right 2 times a day. So come on, you get
Kramer was the one. Kramer was pushing crypto, and a while back, he said crypto has no value.
he
So while I
says
think
things.
it's fair for
He
people,
contradicts himself constantly now. I don't think
he
he
does.
remembers what he says.
No, I agree with that. And I think it's fair to say that people can investigate crypto and change their mind. But to say crypto has no value and then say it's time for crypto is a really weird switch.
Yeah, I don't think he's fully with it anymore. Yes, and we play price action, so it doesn't matter what we think. It
True
matters what the
story.
price is doing. So yeah, I mean, we
True
had this
story.
nice, beautiful Head and Shoulders last night. It was a little short term, beautiful Head and Shoulders. Just wanted to leave that out. Coming down, pausing at the final target. Then we got a double top, which is interesting. I was following it on. Let me take this off. I was following it on the 1 hour, and it closed back above. It didn't fully trigger on the 1 hour. It confirmed, but did not trigger on the 1 hour basis. So we'll see if this turns into a shake and bake pattern. Any other comments before I go through the levels for people?
I really don't want to leave without Chris rewriting his things. I
All
don't know
right.
if he's
Well,
there.
Bob, thoughts on the credit market?
Yeah, the credit market actually seems to be holding up fairly well. Rates did rise on the 1 week, the 6 month, and the 1 year this week. So the credit market is getting a little bit worse just overall. 5 year CDS has jumped as well, but it's not collapsing as of yet. I think part of what we saw in the oh God, I just lost my train of thought. In the mortgage rates backing up shows you that there is still demand for credit because there's demand for mortgage-backed securities. But the Fed balance sheet is shrinking, and it's shrinking fairly quickly. I looked at that yesterday after the live stream, actually. Fed balance sheet. I want to look at that really quick because it has a little bit to do with credit. Fed balance sheet, all assets. Oh, come on. You got to make me ask for the chart. Yeah, I can't find it. I'll talk about it. Oh, here it is. Never mind. All assets. Yeah, the Fed balance sheet fell from 8.8 trillion to 8.4 trillion. So that's a pretty big drop. That's a pretty good drop. No, I'm sorry, I'm reading that wrong. From 8.9 trillion down to 8.8 trillion. So it's actually not as big a drop as I thought, but it's still a drop. So their balance sheet is starting to roll over, and as it starts to accelerate, again, they're not selling assets yet. Okay, they're just letting assets roll off the balance sheet. It'll probably get a lot worse, Sterling. All right, Chris hasn't rewritten it, so Mike, if you want to ask him some other
Yep.
place and let me know, I'll try and
All
answer
right.
that. All right, guys.
All right. Thanks, Bob.
Chat with you all later.
All right.
See you.
Bye. All right, everyone. Let's get to some quick levels. S&P coming back down with this 1 hour double top, what I was talking about. Again, did not close. It confirmed, went down to the first target, but did not close below it. I'm actually watching for a potential shake and bake pattern now. So first target hit with the reversal. I'll show you what I'm watching for off the open. And I need at least a 15-minute close, but we've already come back to that 50% retracement, pausing there on the last 15-minute bar. My key level now for on a closing basis is about 38.94. If I get a 15-minute close, I need at least a 15-minute close above there. Then I'm watching for a retest this 39.03 to about 39.09. What's interesting is if this does get a stronger rally on, everybody who got short off that drop jobs thing will cover, and we could get the propulsion the other way. What levels do I have on here? I have the shorter term levels, these shorter term harmonics from the last little push higher yesterday, which gives me a major harmonic cluster should we do some kind of shake and bake at about 39.24. And then the next major level above that is 39.34. Now, if we roll over and don't get this above the 50, roll over on the open, especially don't get to close above the 62.5 and roll back down, I will reuse 38.69.75 as a first target, 38.63, then 38.56. So now I do have really nice upside and downside targets. Just keep in mind, cycle's still at the top on the daily, but not yet rolling over. If we do start getting a weaker close today, we could start getting the roll over signal in that. NASDAQ did not have a double. You saw I pulled off while Bob was speaking. I pulled off that 5-minute head and shoulders, which hit the targets overnight. And then the breakdown area for the NASDAQ, here's where I'll use the little mini with this pot. It's not the best pausing bar, but it gives me lower levels at this point. And we do have the cluster back here with this prior breakout area. So we start breaking down. I'll watch the 11.952, 11.925 to about 11.922, then 11.898. Below that, 11.850 if it goes in all out severe mode, and just in the next level for the point of completeness, 11.756. The NASDAQ, if we start rallying, is the last one I'm looking to right now, right, because it broke down the hardest along with the Dow, but the S&P is holding up the best. So the breakout play would be in the Dow. The breakdown play looks like to either be in the NASDAQ or the S&P is the breakout play, the upside. The breakdown play is NASDAQ or Dow on a rollover play for me. Again, you can watch this, put on your reverse harmonics. Got to talk quick and really watch. You see the support ledge right here, 12,086.50. Get a close at least 15-minute. Then I'm playing for the retest of yesterday's highs. Dow finished its double. You see this little double top finished, and then the spike remove higher. I still have the reverse harmonics. Watch for that 15-minute close above about 31.350. If that happens, I'll retarget the highs. Otherwise, I'll use these harmonic levels. If it does break down, sorry for going so fast. Thought it was important to get Bob's thoughts on stuff. If we start breaking down and get below this spike low from non-farm payrolls, 31.165 area, then about 31.135, then majors, this 50% harmonic, 31,100 essentially. Let's just skip over a couple things. We don't need to do the Russell. Crude, remember we still had that aggressive buy, little pause. That I'm taking the rotation zone with a grain of salt because we are in a bigger consolidation. But on a sustained rally, if it can finally get through, this is moving up stops area from that aggressive buy with the percent B, 106 area, and if move up stop area, then I'm watching this cluster area about 108.50 to 108.75. And this is a really good area. So, the key support now, if it does roll over, is coming about 101.20, and where you don't want to close back below for the bull case is about 98.85. Q levels, of course you need the Q levels. Come on, Q levels. I should just charge you for a paid service options 22. Q levels we can use. Remember, we already hit that 87.5. Pre-market down slightly right at this. I would just, here, we'll just, since it already hit that, we'll reverse these. Pullback levels, let me just look at the shorter term basis. Right now, support level coming in about 290.75. You have this little breakout wedge and the rising 1 hour rotation zone. If it did drop below that, about 288.30, but I'm looking for a potential if we do strengthen for that rotation back up. There could be the gap play also on a rally. 293.25 is minor, and then it would be to the gap play. On the sell-off below that 293.40, I'd be watching. Minor would be about 289.85, and then major level, next major level is 288.27. You need to make some trades from the beach. You're really on vacation and you need to make trades. Send me the wire instructions. So that's really key. On if it goes into some major sell-off, your major support, even for next week, is 285. I just go off 286 right at this level. But you do have a fair amount of support. You are in some clear path moves, but I'd be really keying off this 290.75 to about 290.64. You do have a little gap fill play down here too. So let me just take a closer look at this. Where you don't want to break below on is below about 289. Let me give you the exact number, 289.65, because then I target the gap fill, but that's going into the 4 hour rotation zone, so I doubt you'd get some major trading below that today. All right, let's just peek in at Tesla. We completed that double yesterday. We're sitting right here. To downside, my key support's about 709, and then major support's about 687 on a breakdown play. If the markets reverse and go up, major cluster about 751 to 753. So those are my targets. Above that on a stronger rally, remember, you still have a gap left behind, and my next target would be 772. Let's peek back at the NASDAQ. NQ already bounced off to 62.5. That's why we use these levels. That's why we use the levels. From which one? Off the sell-off bar, I put up the larger term levels, but off the sell-off bar came off the 50. Right for me. So if you want something, you're going to watch off this minor move, the 62.5 levels, about 12,048. I'd really be watching the overall major move to get to a bullish case. Right now, remember, the 50% is about 12,060 right here. And to get in the bullish case, you need that close above 12,088. By the way, the VIX, let's see. Here's what I'm going to be watching off the open in 2 minutes. And again, this is a delayed data because I can't get it live on this, but it looks like pre-market is up. Somebody can give me off their trading platform. I get it live on my trading platform. But here's what you should watch off the open with the VIX. Going to be watching on a reversal if the market strengthened for the gap fill. Otherwise, if this just pushes higher with the continued sell-off, with the targets of 2650 roughly and 2647, 2658. All right, so keep an eye on that VIX off the open. Gap fill, I'll watch for slight rally play. If it starts fulfilling this a double, then it's the sell-off play. You are welcome, everyone. Again, if something major happens, I'll come on at lunch. If not, I'll come on this afternoon. The timing might be slightly different. I will put that in Discord. Thank you, VIX2630. So that's already looks like it's going to hit the first target right off the open. Washing machine repair guy coming back again today between 1 and 5. So don't know the exact timing for that. So if the live stream has to change by a bit, I will put it on the Discord server. With that, everybody trade well. If you don't have a great setup, sit on your hands. And there's no long-term setups just yet. Besides, overall, we're in long-term sell mode on rallies, but there's no swing setups just yet. With that, I'll talk to everyone later. Bye for now.